Hello friends, this is Khushroo Panthaky and I'm going to present to you three important standards on reporting, which is SA700, 705 and 706, all in the revised avatar. As you have been aware, when we are ushering into this particular audit season for the year ended 31st March 2019, we will be required to report in the new format. And therefore, these standards are very, very important for us to understand, interpret, and make practical applications of these standards. We are in a very dynamic world today, and there have been quite a few changes happening in India and internationally insofar as financial reporting is concerned. Audit reports are very, very important because through the audit reports, the investors, the stakeholders, the shareholders, and many others who have an interest in an organization would be able to read through and would be able to visualize and analyze which are some of the important matters that would have impacted the organization. A lot of trust is there in the auditors, and I'm very sure that we will be able to meet the expectations of all these investors, stakeholders, shareholders, and others insofar as an effective and an efficient reporting is concerned. Why is there a change in the audit report now? As you know, globally there had been a financial crisis and more responsibilities are bestowed upon the auditor. It's important also that the investors and other users who actually use the financial statements evaluate what is there in the audit report in addition to the pass or the fail opinion, which means that whether it's a clean opinion or whether it's a modified opinion, whether it's an adverse opinion or whether it's a disclaimer of opinion. At the same time, the audit report should be very much relevant to the users and therefore should have appropriate information therein. This is important as well because the audit report under the current scenario is also laying a new foundation on the reporting and some of the improved audit communications. What are the benefits that one would expect from the new audit report? Definitely, this is much more comprehensive and has more paragraphs compared to what they had earlier. Its overall improvement, definitely, of the key deliverable to the audit, because ultimately the audit report will talk about what are the important findings in the audit, and it also ensures greater transparency of the audit and the results of the financial statements. What are some of the important focus areas in the audit report? Or which information will bring in more quality to the audit report? Definitely, increased audit quality is ensured in the audit report due to the increased auditor focus on the matters to be reported. There are enhanced financial statement disclosures due to the fact that there is an increased focus on the management responsibilities and those charged with governance. And finally, it ultimately ensures enhanced communication between the auditor and those charged with governance. The new and revised auditing standards on reporting comprise of actually 4 standards. One is 700 revised, which is forming an opinion and reporting on the financial statements. Second is 701, communicating key audit matters in the independent auditor's report, which is not forming part of my presentation, but I'll touch upon that as well. 705 revised, which talks about modifications to the opinion in the auditor's report. Modification is an important word, and we should not mixing it up with the qualifications. Qualification is one part of modification or one type of modification. And then finally 706 revised, which is nothing else but the emphasis of matter paragraphs and other matter paragraphs in the independent audit report. These are going to be applicable effective 1st of April 2018. I'm just talking about what are the new enhancements to the auditor's report. So on the left hand side you have auditor's report, which is normally applicable to all kinds of entities. And on the right hand side, it is for the listed entities as such. First of all, as you see, the important change in the audit report is that the opinion is going to be the first paragraph of the audit report after the introduction to the company and the financial statements to which they relate to. So opinion is emphasized, and that is a significant change. You may recall that in the earlier avatar of the audit reports, the opinion used to be one of the last paragraphs, and now the opinion is going to be the very first paragraph. Then there is an affirmative statement of the independence and the fulfillment of ethical requirements by the auditor. The auditor has to make a very clear communication that the auditor or the firm of auditors is independent of the client. The third thing is in relation to the going concern. Going concern definitely to be narrated is the responsibility of the management and those charged with governance. And at the same time, the auditors have a responsibility to evaluate the management's evaluation of going concern. And therefore, there is a separate section in that regard. Then there is a specific mention about those charged with governance. Generally, under the audit report, you will have management who will take the responsibility of financial reporting, and then there are those charged with governance, which includes the directors, independent directors, and some of the other non-executive directors who oversee the financial reporting process. So here, wherever applicable, in case if at all there is an audit committee and a board having independent directors as well, those are the people who are charged with governance, and they will have an oversight on the financial reporting. Ultimately, the financial reporting is the responsibility of the management. And finally, in the audit report, you will have some of the enhanced description of the auditor's responsibility, including some of the key features of an audit. In the case of listed companies specifically, there is a new section now, which is called the key audit matters, or what we call as CAMs. And these are the matters which, in the opinion of the judgment of the auditors, which in the opinion of the auditors, or in the judgment of the auditors, are of most significance in the audit of the current period. So this presentation has got some of the sections. We will talk about what are the rationales for the amendments to the audit report, what are the significant changes in the audit report, and finally some of the QRV observations which actually came out of the QRV conducted in the past. As I mentioned, audit for the financial statements for periods beginning on or after 1st April 2018 would be supported by a revised audit opinion. The overall purpose, the overall objective is to ensure to improve the quality of the audit and the financial reporting process. So 700 revised will talk about auditor's work and the management responsibilities, and again provide an additional focus on the going concern. 705, which is a revised standard, will talk about impact of key audit matters paragraph in the modified auditor's report. 706 will talk about emphasis of matter and some other matters, and provide an understanding of the relationship between an EOM and the key audit matters in the audit report. And 701 basically will talk about the key audit matters forming part of the audit opinion, and what kind of a judgment has been exercised by the auditor in bringing out those key audit matters in the audit report. As I mentioned earlier, SA700 revised deals with the auditor's responsibility to form an opinion on the financial statements based on the audit. It also provides the form and content of the auditor's report, the format of the audit report, the structure of the audit report, and again it's an audit of general purpose financial statements. It definitely deals with another standard as well, which is 701, communicating key audit matters in the report, in the case of listed companies as well. Normally, an auditor will express an opinion on the financial statements. If the opinion is clean, it is called as unmodified opinion, wherein the auditors will mention that the financial statements give a true and fair view of the state of affairs as at the year end and of the financial results of the operations of the company for the year. 700 revised, while forming an opinion, an auditor takes into consideration a lot of factors. The auditor has to ensure that he has obtained reasonable assurance that the financial statements are free from material misstatement, and the auditor should conclude that sufficient and appropriate audit evidence has been obtained by him, and in case if at all there are uncorrected misstatements individually or in aggregate, they would not significantly impact the financial results of the enterprise, because generally the auditors will have to take a call based on the materiality. If the net impact of the misstatements as determined by the auditors is significant and beyond the materiality thresholds, then the auditor will have to make those adjustments. If the net impact of the misstatements is not material or below the tolerable thresholds, then in that case the auditor may not make the changes to the financial results of the enterprise. Generally, financial statements are prepared either to represent a fair presentation framework or in the event that they are not presented in accordance with the fair presentation framework, then in that case it will be in accordance with the fair compliance framework. And therefore one has to see whether the presentation, structure and the content of the financial statements are in accordance with the regulations, number one, and wherever the financial statements include the notes to accounts, whether these notes to accounts actually represent the underlying transactions and events in a manner which achieves a fair presentation as well. Basis for opinion. In order to give an opinion on the audit of the financial statements, the auditor will have to form the basis, and this particular paragraph forms part of the audit report. This paragraph talks about whether the audit is conducted in accordance with the standards on auditing, which is important. It also refers to the section in the auditor's report which talks about the auditor's responsibilities. As mentioned earlier, this also talks about the auditor's independence, as to whether this auditor is independent of the entity in accordance with the relevant ethical requirements, and the auditor has fulfilled all the other ethical responsibilities. And finally, it's important that the auditor also makes a disclosure under this paragraph as to whether he has obtained sufficient and appropriate audit evidence to form the basis of opinion or to form an opinion. This particular slide will actually give you a comparative analysis between what structure of audit report was existing as of date today and what structure it is going to be in place effective this particular audit season, which will be for the year ended 31st March 2019. If you look at on the left hand side, which is the current format and not the revised format, you will see that the auditor's opinion is coming much later in the format of the audit report. Initially, one would talk about management responsibility, auditor's responsibility, basis for opinion, and the auditor's opinion. And then you will come to the emphasis of matter and other paragraphs. But if you look at on the right hand side, which is basically the new avatar or the new format of the audit report, it talks about the audit opinion at the very beginning. You have the title of the report, you have the addressee to whom the report has been addressed, then you have the title of the report, and then you have the opinion paragraph, which actually reiterates or emphasizes about the fact that anybody reading the audit report, first of all, should be in a position to talk about the opinion. The moment the people read the opinion, or the moment the investors or the stakeholders will read the opinion at the beginning itself, and if it's a clean opinion, they are not concerned about the rest of the report. Whenever the opinion is going to be a modified opinion, that is where the concerns will come, and there will be a much more reading of the audit report till the end as well. If you come to the later part of the audit report and the new avatar, you will see key audit matters, which is part of 701, which I'm not covering over here at this point of time. And then if you look at the section, it's calling responsibilities of managements and those charged with governance for the financial statements. In many companies, as I said earlier, there is a responsibility on the management to prepare and to be responsible for the financial statements, whereas others have an oversight responsibility on the financial statements, and it is those who are charged with governance who take the ultimate responsibility of oversight on the financial statements. This is one of the important aspects of the new format of the audit report. However, in the new audit report, you will also see that the wording of the opinion on the financial statements has been modified. In the case of an unmodified opinion, you will see a different kind of a language currently, and it reads as follows. In our opinion, the accompanying financial statements present fairly in all material respects and will give a true and fair view in accordance with the applicable financial reporting framework. And in our opinion, the accompanying financial statements gives a true and fair view of the financial statements of the state of the affairs of the year end in accordance with the financial reporting framework as well. Management responsibilities. As you all are aware, it is the management who is responsible for the financial reporting process and who is also responsible for presenting the financial statements to the board. The board will ultimately take the responsibility and will have an oversight, as mentioned earlier, on the financial reporting process. It is also the responsibility of the management in assessing the ability of the entity to continue as a going concern. Now, whenever the auditors review the going concern, or even when the management talks about the going concern, It means that whether the company will continue to exist 1 year down the line. Going concern is normally seen as 1 year down the line. So, for example, when we are looking at the financial statements for the year ending 31st March 2019, the responsibility of the management and the responsibility of the auditor insofar as evaluating the going concern would remain until 31st March 2020. 1 year down the line, whether the continuation of the entity in existence would be assured or not is something that needs to be determined. Management is also responsible for the fair presentation of financial statements and which should be in accordance with the accounting standards. Then comes the very important, again, in terms of those responsible for the financial statements and those having an oversight on the financial reporting. Oversight relates to the board, the directors, and responsibility relates to the management. Now, coming to the responsibilities of the auditor, there is an improved description in the new audit report. This section of the audit report includes the objectives of the auditor, which are basically to obtain reasonable assurance as to whether the financial statements are true and fair, whether they are free from material misstatement, whether due to error or a fraud. It's always important for everybody over here to understand that auditors cannot give any absolute assurance on account of the fact that the auditors are not going to check everything 100%. They will have to adopt certain audit procedures in line with the standards and will have to carry out test checks and to carry out a fraud risk assessment and carry out many other audit procedures in line with the standards. And therefore, it's never possible to provide an absolute assurance, and therefore it's important that one asserts on the fact that it's important to understand whether auditor has obtained reasonable assurance about the financial statements and that they are free from material misstatement. And also, to issue an audit report is the responsibility of the management, of the auditor, which includes the auditor's opinion as well. The reasonable level of assurance is a high level of assurance, but would never guarantee that an audit which is conducted in accordance with the auditing standards will always detect a material misstatement when it exists, because there can always be a miss out depending upon what kind of procedures the auditor has put in place. The auditor also has to state that the misstatements can arise from an error or a fraud, and either describe that they are considered material if individually or in aggregate they could reasonably be expected to influence the economic decisions of the users taken on the basis of such financial statements. Or the auditor has to provide a definition or the description of materiality in accordance with the applicable financial reporting framework. There is again an improved description insofar as the responsibilities of the auditor is concerned. Professional skepticism is something that should be the prerogative of the auditor and should be treated in the best possible manner for the auditor to conclude. An auditor will always exercise professional judgment and maintain professional skepticism throughout the audit. Auditor's responsibility also includes to identify and assess the risk of material misstatement as to whether there is any kind of a material misstatement in the financial statements of the enterprise. It is also important that the auditor designs and performs certain audit procedures responsive to those risks and obtaining sufficient and appropriate audit evidence. The other important responsibility of the auditor includes obtaining an understanding of internal control. So the auditor is required to carry out an internal control assessment. It's important that the auditor will meet the key process owners in a company which is auditing, actually holds meetings with them, understands from them what are the inherent risks in the business, then will come to the audit risks and accordingly will mitigate those audit risks. It's important that the auditor will be in a position now, having met everybody and understood the control environment, he will look into the fact that how the controls are designed by the management, and the second most important thing will be to understand how the controls are operating. If the controls are operating effectively, it's great, but then auditor has to make a proper documentation of the same. So the responsibility of the auditor is to obtain an understanding of the internal control relevant to the audit in order to ensure that the audit procedures are properly designed and whether the controls are properly designed and whether they are operating effectively. Secondly, auditor also has to understand the accounting policies and determine whether those accounting policies are consistent from year to year or from period to period so the appropriateness of the accounting policies and consistent application of the accounting policies. And overall, the auditor has to also determine and assess whether the presentation, the structure, and the content of the financial statements are in line with the standards. Finally, as I mentioned earlier, appropriateness of the management's use of the going concern basis is something that the auditor will evaluate, and if required, if there is a difference of opinion, the auditor will discuss as to why the management believes that the company will continue to be a going concern, and the auditor may not believe that the company is going to be a going concern, and if at all there are such differences, then they need to be resolved. If the auditor is not happy about it, then in that case, the auditor will have to make appropriate disclosures, either by way of emphasis of matter or by way of disclaimer in the audit report. This particular slide will give you the description of the responsibilities of the auditor in terms of auditor communicating some matters to those charged with governance, which relates to plan, scope, and the timing of the audit, and talk about the significant audit finding. Then the auditor will state about those charged with governance, saying that the auditor has complied with the relevant ethical requirements regarding independence, etc. and all. And finally, key audit matters which are communicated in accordance with 701 also will become part of the audit report. In the interest of time, I'm trying to just quickly run through some of the slides and will focus on some of the other important slides. Other reporting responsibilities. There are other reporting responsibilities insofar as auditor is concerned. Generally, you will see where internal financial control attestation is required to be provided in the audit report. There will be an annexure to the audit report on the internal control frame attestation. And there is also an annexure to the audit report which talks about other reporting responsibilities, which is nothing else but the report on other legal and regulatory requirements, which basically will include the CARO as well. Key audit matters. As I told you earlier, I'm not covering this particular section or this particular standard, but this is a new standard which is in existence from 1st April 2018. And for the very first time, you will see the key audit matters being reported in the case of listed companies and some other applicable entities for the year ending 31st March 2019. As far as the documentation is concerned, the auditor needs to document very well whatever work he has done or whatever work the firm has done. There is a very popular saying in the auditor's jargon that no documentation done is no audit done. It is therefore my sincere request and earnest request to ensure that your documentation is absolutely robust and in line with the standards.